Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Finally, the general election results are out, and what a shocker of a result, especially if you were following the exit polls. I would like to highlight this. JK has been mentioning both on our podcast and otherwise that exit poll results need to be considered carefully, as a 2004 like surprise can occur, and that's what has happened, ladies and gentlemen. Good morning, JK. Shocker of an exit poll for the ruling party. How are you reading it? Equities also saw good battering yesterday. Your thoughts, please.
Yeah, good morning, Swaraj. Uh, yes, it was a shock, definitely. Considering that, just before the exit polls, most of the analysts were uh, coming to terms around 300 number for NDA, 300 to 310. They were not on the 350 plus side, although a minority was always looking at 350, 400 and all that. But when you had majority of the exit polls showing 350 on an average, the market sentiment was greatly influenced, and that is why you saw a big rally on Monday in stock market, and also even rupee strengthened towards 80 to 95. But if this had not happened, yesterday's result would have been taken more soberly by the market. So the move of day before yesterday not only got corrected, but the shock element and the panic that ensued after the big sell-off started yesterday carried the stock market much lower. Now, the impact on the rupee was not seen much because rupee has anyway been held in a very uh, stable range between 83 and 83 half. Even on a euphoric post-exit poll scenario, rupee did not break 83 conclusively, and it moved up quite fast towards 83.30 and 83.40. And yesterday, of course, there was the big outflow from FIS, more than 12,000 crores, one of the largest outflow in a single day, meaning about $1.5 billion. So had it not been for the efforts of the state-run banks, we would have easily crossed 83.70 also yesterday. But at least for now, RBI seems to be holding their policy steady of keeping the rupee stable. Now, what's ahead going forward? Now, for the stock markets, of course, there are several factors which has to be looked at. First of all, we need to see whether we have, coalition government formed, which promises stability. How strong is the coalition going forward, and in turn, how much it translates into the reforms and the development policies, because coalitions always result in some sort of a compromise on certain policies. So that is something that the investors will be closely looking forward to. If the policies of growth and development are continued, market can quickly stabilize. Otherwise, if there are doubts, the markets will be under pressure. I'm mostly talking about the stock market because that guides everything else. And also, as of now, I think if there is NDA forms the government and the government is sworn in, that will be seen as a relief event for the market, and we will see a rally in the stocks, and also the rupee slightly recovered, and then market starts to assess how the coalition works in the coming weeks and months. Yeah, so that's the key thing here. How But there are the other sides who say the other possibilities. Even the opposition alliance might try and bring in more post poll alliances into play, and try to form the government. But that could be a even weaker coalition, because the number of outfits that form that coalition is a lot more, and there will be questions about leadership and all that. So overall, I think the picture has completely changed as far as Indian political stability is concerned. So it will need period of at least 6 months of stable coalition to exist for it to give investors the required confidence. We have had coalition governments in the past surviving more than the full term, and so let us remain optimistic. It can happen now also. So it requires a lot of effort, political effort, to maintain that. But for the rupee in particular, how the flows play out is more important. We have been expecting a large inflows for bond market, and whether the investors adopt a likely wait and watch attitude for things to settle down before those flows come in. And also the larger flows that were expected on the basis of a stronger government in place and more reforms and opening up of the economy, that may actually be on hold. Therefore, there is a question mark on how much flows India can expect in the coming year at least. This would mean that the rupee can be somewhat on the weaker side. Let's remember that rupee has not weakened beyond these levels for more than a year, and on if the demand supply situation is extremely in favor of the demand, then RBI may let the rupee fall a bit more towards 84, and that is something that we need to watch in the days to come, how they adapt the policy, particularly of the after the government comes in place. So a lot of questions, but less answers. But we'll remain alert and keep you posted. Thank you.
Thank you, JK. And just quickly summarizing the move post the exit poll, not just corrected, but the shock because of the divergent outcome from the exit polls led to some panic reaction, especially in the stock market. Rupee depreciated quickly, but because of the very active management by the central bank to curb any sharp depreciation, we were still not exceeding the levels negatively 50, 55. Markets would be keenly looking at the coalition government now. Any doubts on the stability of the government can create some undue volatility, and that's what participants and foreign investors and every participant would be looking at. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.